Welcome friends. Please subscribe to our channel. Let's discuss the accounting cycle. Accounting cycle is a series of steps involved that starts from recording the transactions and ends up with the preparation of financial statements and closing of books of accounts. What is the purpose, objective, of the accounting cycle? To record all the business transactions in the books of accounts, without missing any single business transaction or event, in a systematic manner. Recording of business transactions in accordance with the applicable standards, policies consistently. This is to ensure the arithmetical accuracy of books of accounts. The series of 10 steps involved in the accounting cycle. The following are the 10 steps involved in it. 1. Identifying the business transactions. The first step to collect the source documents and identify the business transactions. Identifying the business transactions of monetary in nature. Only monetary transactions will be recorded in the accounting process. 2. Recording the transactions in journal. The second step is to record the financial transactions in the journal. Journal is a book of primary entry where all the transactions are recorded in chronological order. 3. Posting the recorded transactions to ledger accounts. Then posting the recorded transactions from journal to ledger to the relevant ledger accounts and balancing the ledger accounts to obtain their ledger account balances. 4. Preparing unadjusted trial balance. We will prepare the trial balance from the obtained ledger balances as well. This trial balance is called unadjusted trial balance as it is prepared before passing adjusting entries. 5. Preparing worksheet to identify the errors to ensure that all debits are equal to the credit. 6. Passing adjusting journal entries for the errors identified. The next step is to pass the journal entries for errors identified. 7. Preparing an adjusted trial balance. After passing the adjusting journal entries, we will prepare the trial balance before preparing financial statements. This trial balance would be called adjusted trial balance. 8. Preparing and presenting the financial statements. Finally, we will prepare the financial statements from the given adjusted trial balance. The financial statements would include profit and loss account, balance sheet, cash flow statement, notes to accounts. 9. Preparing the post-closing trial balance after post-closing entries. We will be preparing a trial balance after passing closing entries. This is prepared after preparing financial statements and passing closing entries. 10. Closing the books of accounts at year-end. Finally, we will close the books of accounts at the end of the financial year. To conclude, accounting cycle is a series of steps that begins with recording business transactions to closing books of accounts.